Commodity ETFs are, well, the official name for them is actually Commodity ETCs, Exchange Traded Commodities, which are essentially built to track a particular commodity such as gold, for instance. The key element that ETCs offer is diversification in your portfolio. They don't necessarily enhance returns, but certain commodities have for instance, if you're a portfolio manager and you're very concerned about inflation, gold is typically known to be a good inflation hedge. So that's quite often the role it can perform. That, and other than it's generally good for a portfolio to have diversification. Originally there were significant practical problems by investing in gold, for instance. You would have to receive physical delivery, find somewhere to store it, and that was very impractical. It took a long time to execute the trades and deliver the product. The great thing about ETCs are you can buy them on exchange, over the internet, over the phone, and it's a trade that can be executed within minutes. That's a key advantage over originally having to invest in a direct physical product. ETCs have been performing poorly recently. There's been the primary reason why we've seen this poor performance is significant concerns about China and its economic growth. A very large proportion of the world's consumption, roughly 40% of the world's consumption of commodities, has been through China. So it's very important what China does and what the government does in China really has a big impact on commodities. Now, there's been significant concerns about China's economic growth. Expectations were 10 years ago for 10% growth, and now expectations are for around 6.5% growth. Looking at some sort of rather unusual or unconventional measures such as electricity consumption, you can see that in fact growth could even be around 4 to 5%, so much lower. And that's been reflected in the commodity prices, and we've seen substantial falls from the peaks. But our view going forward is actually that China economic growth is probably set to plateau, and government stimulus is set to be very strong towards 2020 mark. And we're actually seeing an elevated level. Consumption from the top 4 commodities, for instance, in China, are growing at around 9% year on year. So whilst the market's expectations are for that consumption to fall, it just hasn't happened. And for that and several other reasons, we believe that perhaps we're at close to the floor in commodity prices. The ETC market is equally divided between the United States and Europe and comprises approximately $80 billion. But it reflects quite a small portion of the overall commodity investments. As an example, for instance, in gold, central bankers typically hold physical, so they don't need to own the ETCs directly.